Hello again. Happy Thursday. Thank you guys so much for joining and tuning in with me today. Today, we're going to talk about taxes. Yes, I know it's a dreaded topic, but there's a lot of different things going on right now that I think are really important for you guys to know, especially in the state of Georgia with some of the tax changes that have gone on this year. If you've watched any of my videos in the past, you've probably heard me talk about some of those changes that have gone on already. But today, we're going to dive in a little bit deeper. So, as always, welcome. Thank you for joining. I truly do appreciate you tuning in every week because you guys are literally the reason that I do these every Thursday just to make sure that you're getting information that's necessary. And if you have any questions, that you can get answers to those questions. So, go ahead, drop a like, drop a comment, let me know what your thoughts are. And specifically, if there's any questions that you have about the topics that we talk about today, or if there's topics that maybe you've seen that you would like for me to cover, make sure that you let me know about those because that only helps me to get even better. So, without further ado, I want to dive straight in, not waste your time. Obviously, one of the big challenges that we've been facing over the last couple of years is housing affordability. It's a very hot topic because with everything from 2020, 2021, and the increase in housing prices, then over the last couple of years, we've experienced those increases with interest rates. It's just continued to make housing affordability unrealistic for many. And so I don't think that a lot of people have really paid attention to the flip side of that, which is the taxes and how affordability is really affecting our property taxes. And so only, when you really sit and think about how when you have affordable housing or unaffordable housing and increases in the market, that also translates to your property taxes increasing over time as well. And so it's a really important thing to think about because that affects your monthly payment, which I think is what a lot of us really focus on with affordability. If you tell me the price of a home is $500,000, great. Tell me what that's going to cost me each month to let me really see, does that fit into my budget or not? And if we have scheduled our budget, kind of tailored our budget around a specific monthly payment, and then that changes, we kind of need to be able to budget that. And with inflation, it's a really hard thing to do. So there are a couple of states that are trying to change how things go because rising home values driving the property taxes up, but these states are trying to do something about it. So if we look at all of these proposals are really about the desired level of overall taxation and who has to pay it. So the proposals follow a rapid surge in home values, which have jumped 54% in the past 5 years. 54%. That is a massive, massive number. So if we look at that, Georgia residents, they're going to vote on a measure that would allow assessments on residential property values to be capped at the rate of inflation. So you've heard me talk about this probably a couple of times already this year, but Georgia's Governor Kemp has kind of put something in place where Georgia would be capped at a 3% property tax increase per year so that they could not go up further than that. However, where the catch is, if like the millage rate, which we're going to talk about in a minute, if the millage rate were to change in each county, that would not be affected by that 3% cap. So that's something that you really want to keep in mind. So while this opt-out measure, because right here, local governments would be able to opt out of implementing the cap after publicly announcing their intention to do so and holding public hearings on the decision. So while this opt-out measure is included, it would be disappointing to see local governments utilize it during record high inflation, skyrocketing debt, and expenses rising every day. Local government should be focused on bringing costs down, not letting them increase. I think all of us would love to see that. However, I can tell you that that's probably not going to be the case across the board. So one of the things that we want to look at here is If we take a peek here, New York is the #1 most expensive state. Okay. I don't think that is a surprise to most of us. But if you look here, I wanted to dive into this a little bit because a lot of times when I talk to a couple of you, you've kind of been comparing states here in the Southeast. And Georgia comes in overall ranking at the 36th most affordable state. New York is the least, and we come in down the line at number 36. And so if you look at the tax burden overall, it's 7.65% compared to Tennessee at 6.07 and Florida at 6.05. And then if you look at the property taxes, we're at 2.5. Tennessee's a little bit lower at 1.64. Florida's actually a little bit higher at 2.61. And then if you look at the individual income tax, well, that's where we are a little bit more because we have 2.36%, Tennessee and Florida both having zero income tax. But then if you look at the total sales tax, in Georgia, you're looking at 2.79. Tennessee, you're looking at almost double at 4.38. And Florida is also higher at 3.44. So those of you that have come on, and I know we've talked about this before, about the affordability, because Florida and Tennessee both having zero state income tax obviously is a benefit to them. However, when you really look at it with job opportunities, when you look at the other tax that they have, they're actually a little bit higher in some of the other areas. So it really does tend to balance out. I'm not going to say that there aren't certain areas in Tennessee or in Florida that you might be able to get more affordable housing. But there's also places here in Georgia that you're going to find that as well. So I thought this was a really interesting, perspective and things that you could look at here. And one of the things that you have to think about is, what does property tax even really cover? I've had a lot of people that are asking me, like, what do my taxes cover? Why are my property taxes so high? And you want to keep in mind that property tax, what you're really paying for when you're paying for that property tax, it's not just your specific piece of property. There's so much more that goes into it than that. When you pay a property tax, you are paying for the local public schools. You are paying for the fire department, the local police department. You're paying for the public libraries. And so all of those things are being serviced by your property tax, even let's say local parks. So here in Gwinnett County in Georgia, we have one of the highest parks, number of parks in the area for Gwinnett County than any other location in the state of Georgia. And so Gwinnett County taxes are the second highest in the state behind Fulton County. But you kind of look at, okay, am I getting more for my money here than, some of the other counties? And in this case, yes, you are. You're getting more local parks. You're getting more higher ranking schools in certain locations. Now, you really have to think about, am I utilizing those local parks? Do I have kids in public schools? Do these things matter to me to where, yes, I'm paying a little bit more in taxes, but I'm okay with it because I'm utilizing all of these. I'm paying for things that I'm using, because if you're not, then you really do have to think about, is it worth it? So looking at this a little bit deeper, I wanted to dive into Georgia property taxes specifically. And then in just a minute, we're going to dive into the specific counties. So property tax rates in Georgia, we describe them here in mills, which are basically equal to $1 of tax for every $1,000 in the assessed value. That's why if you kind of look at things as, I'm buying a $300,000 house, I'm probably roughly going to have a $3,000 tax bill. Now, that's not going to be exact because sometimes the assessed rate and the market value are two different things. And that's why taxes can get so confusing, because if I just sold my house for $600,000, but the county is assessing the value at, say, $450,000, then they're really only going to be charging a tax of around $4,500, even though the market rate what a buyer saw the value in, which is that market rate. A buyer may have said, I'm willing to pay $600,000, but based off of the county's appraisal of properties in this area, they are assessing the value at $450,000. Then you're going to be paying the tax on that assessed value, not the market value. So make sure that you understand the difference. So if we look a little bit deeper, this is another thing that you have to keep in mind for Georgia. We have what's called homestead exemption, but there's a couple of things that you have to have in order to be eligible for it. Okay. So you have to have owned the property as of January 1st. And within that, you also have to be considered your legal residence. So if this property is not considered your legal residence, maybe this is an income property, maybe you have this as a second home, or if you have this, as like I said, an investment property, an income property, you have a renter in there, this property is not going to qualify for homestead exemption. This has to be your main primary residence, as well as you have to have owned the home as of January 1st. Now, in certain situations, maybe I just sold you my home and I already had homestead exemption on the property. So if you bought that home today, you obviously didn't own it as of January 1st of this year, but I did. And I already filed for homestead exemption. So you're going to continue to have that homestead exemption through the remainder of this year. What happens is next year, when you now own the property on January 1st, you need to go in and file for homestead exemption for yourself, because now my homestead is going to fall off and you need to reapply. You don't have to continue to reapply every year. Once you've done it the first year, then you're good to go. But you do need to make sure that you do that for the upcoming January 1st. You also must occupy the home, and you cannot already claim a homestead exemption for another property. Again, this goes back to if this is an investment property. If you already have another home here in Georgia that you're claiming homestead exemption on, let's say you have a property, now you've moved to this one, this is your primary residence, but you're claiming homestead exemption on the other property that maybe you're keeping as a rental property. Now you've got to make sure that you're unclaiming that other property and you're refiling for homestead on this new property that you have. So I hope that makes sense. Anthony, you got a question. Let's see. If the buyer pays $600, but assessment is $450 next year, does the assessment change to $600? That's a great question. And no, not necessarily. It really depends on what the county is assessing the value. So just because the property sold for $600,000 doesn't mean that that's what that new property is going to be assessed for. What we saw kind of happening over the last couple of years, especially in 2020, late 2020, all throughout 2021 and early 2022, maybe you lived in this neighborhood, you've owned this house since 1990. And then your neighbors down the street did all of these, improvements on their home. They added a pool, they completely redid the siding, they added windows, completely gutted the kitchen, right? And then they turned around and they sold in 2021 for top dollar. Let's say that really and truly you feel like today you could list your house for $500,000. But in 2021, those people sold at the top of the market for $1 million, right? Yes, that's a stretch from 500 to $1 million, but let's just say, because in certain situations, we did see that happening where people did major improvements to the house and they sold for top dollar. Now, because that person lives a few doors down from you and they sold for $1 million, should your property be assessed at $1 million? No. So realistically, the county is still going to look at comps in the area. So they're not going to just take into consideration that one comp. They're going to look at many of the comps in the area. They're also going to look at, have you done any improvements to your home? So just because the home sold for a specific amount does not mean that that's going to be the new assessed value. It will probably most likely be taken into consideration when the county is looking at their values, but it doesn't necessarily mean that that's what the exact value is going to be. That's a really good question. Another exemption that I want to make sure you guys know about that we have here in Georgia is the senior exemption as well. We don't just have homestead. Homestead is for any age. It doesn't matter what age you are. You can file for homestead exemption if this is your primary residence that you are residing in. But another one that we offer here in Georgia is the senior exemption. So if you are age 62 or 65, different counties are going to offer different ages, but 62 to 65, you're going to be able to file what's called senior exemption. And so what this does is basically you're taking off the school tax for your property tax. And I don't think people recognize how much the school tax is. It's almost 50% of your property tax bill. If you watched my video a few weeks ago, I was actually talking about my mom and I live not too far apart. We both live in Gwinnett County. My mom's obviously a little bit older than I am. And so her senior exemption brought her in under $1,000 for her property tax. Mine was over $4,000. So that gives you a really good idea of that senior exemption and how much school tax really is a part of that property tax. And so when you get to 62, 65, depending on the county, and if you're looking at buying here in Georgia, whether you're relocating within Georgia or whether you're relocating to Georgia, if you're looking at being a senior in the next couple of years, or you already qualify for that, you really want to take this into consideration because, for instance, Jackson County does not offer a senior exemption. I don't know why. It's been on the ballot a couple of times for them to vote it in, and it has not passed yet. So in Jackson County, you would not get the same exemptions that you would in, say, Forsyth County, Fulton County, Gwinnett County, because in those areas, once you turn 62 to 65, you're going to be able to really get a lot off of your taxes. And I don't know about you guys, but when I get to, 62, 65, 70, I'm probably going to be on a much more stringent budget, right? You're really trying to make your retirement or your Social Security last and stay in place. And so making sure that you're saving every dollar that you possibly can is important. So if you're looking at property here, buying a home here, you're going to really look at each county that you're possibly looking at homes at to see, do they have that senior exemption? And if so, what age and how much do you qualify for? So that is another really important one. So I wanted to kind of break it down by county. So this website, just in case you're wanting to go and check this out for yourself, if you go to smartasset.com, you can look at the taxes for each county. So that's smartasset.com, and you can put in taxes, and then you can actually look at the taxes for any state and any city or county within that state. So I go there and I check this out. And so looking at this for Gwinnett County, the average county tax rate is about 1.1%. Property taxes are roughly around $5,000 for a property that is valued around $500,000. So then if we take this over, this is the Gwinnett County. So this was something that I was actually talking about just a minute ago. Gwinnett County actually held the millage rate. And so property taxes are going to be increasing about 6.92% going forward for Gwinnett County. So this is one of those things where they could have rolled back a little bit. They chose not to. They chose to hold that millage rate. So if you live in Gwinnett County currently or are thinking of moving to Gwinnett County, make sure that you understand that there is a property tax increase of about 6.9%. So if we go over and we look at the city of Alpharetta, they're coming in at 0.97. So you're looking at property taxes for the same amount, around $500,000, of property taxes around $4,800 or $4,900. The key here is finding a home in Alpharetta for around $500,000 is going to be a lot harder to find than, say, Suwannee or Beaufort, which are in Gwinnett County. So you do have to kind of keep that in mind when you're looking at area based on the property taxes, and then just really and truly the affordability factor. Now, Forsyth County, so Cumming, Georgia, is located in Forsyth County. They have some of the lowest taxes around the area. So they're coming in at 0.83%, and they're looking at a property tax of about $4,100 for every $500,000 that you are looking at. And then here in Woodstock, which is out in Cherokee County, you're looking at 0.77. So even a little bit lower than Forsyth. So you're looking at around $3,800 to $4,000 for property taxes. So each of these has been, kind of tailored to the area. Now, this is Houston, okay? And in Houston, this is Jackson County. This is where I was telling you, you do not have the senior exemption. Jackson County is also on the higher end when you look at tax rates. So they're at 0.97%. And so if you're looking at property tax bill of around $4,800 to, almost $5,000. And now you're looking at you're 65, 70 years old buying in this area, you're not able to get that senior exemption, which would basically take that tax bill in half. And so that's a lot of money when you're on a fixed income, an additional, 2,000, maybe even 3,000, 4,000, because again, this is going to depend on the price of the home. If you're looking at you own an assessed value of $900,000, or you're buying a home that is around $900,000, this tax bill is going to almost be double, which therefore, if you were cutting that in half, you're looking at an additional possible $5,000 a year. So that's something that you really want to take into consideration if you're thinking about buying in this area and you're on a fixed income. Now, this is something that is held near and dear to my heart because this is something that I talk about quite often of, can you really afford the house? Because just because you can qualify for the mortgage doesn't mean you should max it out. And here is a prime example as to why you should not max it out. Because one thing that we all know steadfast is taxes are going to change. And most of the time, they're going to rise. I don't ever recall really seeing taxes be rolled back to be more affordable for us, right? And so one of the things that you have to keep in mind is if you have a mortgage, more than likely, the bill is going to go up over time because your taxes are something that continuously changes and rises. One of the things that you have to keep in mind is if you own a home here in Georgia, and this is different for every state, so I'm just speaking about Georgia specifically. If you own the home outright, you've bought it in cash or you've paid it off over time, you're going to receive a tax bill in October that you now need to turn around and pay. If you do not own the property outright and you have a mortgage on this, then most likely you're paying into an escrow account each month that you're paying when you pay your mortgage. It's not an additional payment, but when you pay your mortgage, you're paying for your home, but you're also paying a little bit into your insurance and a little bit into like a tax kitty, if you will. And so when that bill comes out in October, it's basically just a notification of, hey, this has come out and this is how much you're going to be charged. But the lender is actually the one that turns around and takes the money from your escrow account and applies that towards your mortgage bill, right? So when you get that statement saying, hey, you owe $4,500 in taxes, please don't panic and think, oh dear God, now I have to pull $4,500 from my savings or from somewhere else that I wasn't expecting. If you have a mortgage, most likely you've been paying into that all year long, and your lender is going to turn around and then pay that for you because they've been taking it out of your mortgage payment each month. Another factor that you have to consider is in about April, May timeframe here in Georgia, you're going to get the assessment, which is kind of what the county is telling you, hey, this is what we think the value of your home is assessed at. Therefore, this is what we're going to be charging you for your taxes. This is your moment to shine where you can say, I disagree. This is not what I think that the assessed value is. And you actually have the opportunity to challenge the assessment. You have the time here, but you have to do it within a 30 to 45 day time frame from when you receive that in the mail. And so you can't just call and say, well, I disagree. I don't think that's what my value is worth. I think it's less. You're going to have to do a little bit of homework. And I actually have a lot of clients that will call and say, Ashley, I just got the assessed value. Do you think this is it? Can you pull some comps for me and see, is this the true assessed value? And so we will do a little back end work, almost like doing a CMA for you. If we were to turn around and sell your house today, we're doing that for the assessment. We're trying to see if there have been other homes that have sold recently, what were those sales? Sometimes we'll even have an appraisal completed to see if the appraisal is done, what is the appraisal coming in at? Is it really warranted? Because then you can turn around and go to the county. You do have to fill out their form. You can go right online and do it, or you can fill it out on a piece of paper that you print off of their website, mail it into them. I'm not going to lie. We've been having mail take a lot of time here in Georgia. You can Google it. It's a thing. So I would probably go onto the county and make sure that I'm filling out their form. There's a lot of questions. So if you're doing that and you have questions, call me, text me. That's what I'm here for. I tell people all the time, just because you close on a property doesn't mean you're not my client anymore. You're a client for life. So if you have questions regarding your property, call, text, email. We can go through this process together, because if you get that passed, then that actually sticks with the property for the next 3 years, and you don't have to get a reassessment for the next 3 years. So it's a really good idea. I'm not going to lie to you. I challenge my assessment every time I can, just because if you have the opportunity to get the value a little bit lower, that's only going to help you. So one of the things people have asked before is, well, what if I'm about to sell my property? Do I want to go through with this? And really, that's up to you. That's up to interpretation of if you want to go through it or not. But if I'm about to sell my property, I'm probably not going to go through the hassle of challenging the assessment, because it is a challenge. You do have to go on and spend time and really look at the value and make sure that you're typing all of that out to the county to make sure that they're getting the information. Otherwise, they're just going to come back to you. They're going to ask questions. They're going to say that they need more information. And so all of that needs to be taken into consideration. So going back to, can you afford the property? One of the things that you really have to think about is taxes change, they increase. And so if they increase, your monthly payment is going to increase, because like I said, they are taking a little bit out of your mortgage payment each month and putting it kind of into that escrow to pay the bill. So if the property taxes go up $1,000 this year, they're going to take that $1,000 and they're going to spread it over a 12-month period. And basically, you're going to repay that in your mortgage each month. And so another factor that you want to consider about, are things really affordable, is the home maintenance of the property. So please do not think that no property, even if you buy a brand new home, there are still going to be things over time that need to be done and you need to take into consideration, because home maintenance doesn't just mean buying a property that's a fixer-upper. I think people grossly underestimate the fact that in 10 to 15 years, if you're still in that home, you're probably going to need an AC unit at some point. You're probably going to need a water heater at some point. If you stay in that home long term, you're going to need a roof. You're going to need to replace windows. If you're staying in the home long enough, you're probably going to want to do renovations. So a kitchen renovation, you're looking at between $30,000 to $50,000. A bathroom renovation, you're looking at $25,000 to $40,000. And these are just rough estimates. So you need to always consider putting maybe $1,000 to $2,000 a year, putting a little bit each month into a savings that is then going to allow you down the line to make sure that you have money to allow for the maintenance that the home just requires over time. So that's something to really factor into the budget when you're looking at, can I afford this property? Let's take a look. Anthony, let's say you are with the assessed value. Is it still advantageous to dispute just to lock the value for 3 years? Um, I'm always going to say yes, just for the simple fact you don't know what next year or the year after is going to hold. So if you can factor that in, because Georgia as a whole has continued to increase. And this year alone, we've continued to increase about 6% with home values. So is it the 20% that we were seeing a couple years ago? No, thank God. But we're still increasing. So a 6% increase on your property value could then translate to a 6% increase in your property taxes. Are we guaranteed that? No, we're not, because it really just depends on what the county is going to say the assessed value is. But if we continue to see these numbers rising, then you're going to see that play out in your taxes. There's no way, it is inevitable that you're going to see that play out into your taxes. And so getting that, challenge and trying to get that assessed value locked in, what they call it here, frozen. Basically, your assessment is frozen for a 3-year time frame. And so if you can do that for 3 years, and then in 3 years challenge it again and see if you can freeze it for that time frame. But this is all personal. It all is up to you, because you do have to take the time, you know, doing putting in the research and the time, um, because you also want to understand that if the county sees that homes in your area have sold for more, and you're trying to basically undervalue the property, they're not going to give you that assessed value. They're not going to agree with what you're saying the value is. Please understand that this is still the county, and they're going to do their homework. They have done their homework, which is why they're saying the new assessed value of the property is this new number. So just because you disagree with it or you don't want to pay more in taxes doesn't mean that that's what's going to happen. You can always argue the fact, but if we look at the comps and see, look, unfortunately, the value that they've come up with is realistic. You're not going to be able to then change their mind and bring that back down. So you have to be realistic in your thoughts and in your research. And like I said, if we're looking at the comps together, I'm going to tell you realistically if what we're looking at is realistic compared to their assessed value. And if you're just wasting your time trying to, challenge them, because at the end of the day, they get to make the decision. And just because you disagree with it doesn't mean you're getting to change things. The welfare office says Ashley is a fraud. Well, I think welfare is in a lot of ways. So I would love to hear more about how you think that I'm a fraud. So love giving you guys information, and you can interpret it how you want, but you definitely don't have to tune in if you think it's fraudulent. So looking at this a little bit deeper, the last thing that you really have to take into consideration is homeowners insurance. So with homeowners insurance, this is again similar to taxes in the form of it's going to change. It is inevitable. Homeowners insurance is likely to change almost yearly. So I actually read an article the other day that stated in certain areas where we've had a lot of flooding, we've had a lot of hurricanes. I know you guys probably saw, like in California and in Florida, State Farm actually pulled out of those states altogether. They've had a lot of weather in those specific states, and with lots of that type of weather, you're going to have a lot of claims on homeowners insurance. And so those people, the State Farm has actually pulled out altogether. And in certain areas, especially in the Northeast, they were saying that some of the homeowners insurance has doubled about 100%. That's insane. So, if your homeowners insurance goes up 100% year over year, I can't even imagine how your monthly payment would change. So here in Georgia, I can say, thankfully, we have not had it go up that drastically, but you do see it continue to go up annually. And so you have to consider that in your monthly payment, that most likely your payment is going to change a little bit every time that you have a homeowners. I always say to shop around, right? Check out Farmers, check out Liberty Mutual, check out There's so many different options that you can look at, and just have them give you quotes and see which one is going to be the best one for you. The other thing to homeowners insurance that I feel like a lot of people don't really understand or pay attention to is the fact that with homeowners insurance, you have to kind of consider what the homeowner's insurance is covering. And sometimes people do not read through their policy. And I wish that homeowners insurance agents would go over it with you to make sure that you understand everything that it covers, but sometimes they don't. And when they don't, that's when you can get into sticky situations, because it's kind of one of those things. Is it going to cover floods? Is it going to cover the water pipe from the house to the street? So I actually had a situation about 5 years ago where a friend of mine, who they lived in a different state, but they called and they were panicked and they were asking me about insurance. And I said, I'm sorry, I'm not educated in your state. You're going to have to call your insurance company. But they had had a pipe burst, and it wasn't actually inside the house. It was a water pipe that went from the house to the street, where the pipe actually, where the water line connects to all of the main pipes. Well, that pipe was not covered in their insurance. And it cost them $7,000 to have basically their yard dug up, the main pipe repaired, certain areas of it had to be replaced, and then they had to cover that area back up, grow grass back in there. But the main pipe had broken. And a lot of policies, a lot of insurance policies only cover what is in the structure of your home. They do not cover outside of the home. And so, yes, you would think that, oh, well, that's still my property. Right. But it's not the home, it's in the yard going outside of the home. So you want to ask your insurance agent, hey, is this covered? If I live next to a creek, am I covered if that creek floods? If I live on the lake, do I need to have flood insurance? If I'm, anywhere close to something like that, am I going to be covered? There is never going to be too much information you can get when it comes to your homeowner's insurance policies. You can also get what's called an umbrella policy, because an umbrella policy will likely, in some of these instances, cover you if something isn't covered under your main policy. So again, I am not an insurance agent. I cannot tell you what you should and should not do. What I can tell you is that I've seen this happen to people way too many times. And so I definitely think it's worth a call to shop around. I definitely think it's worth a call to, make sure that you're asking questions about what does my policy cover in the instance something like this were to happen. So, Anthony, although unlikely, if the economy recedes and housing prices start to go down, will property taxes go down as well, or will they keep the value the same as last year? That's a great question. I wish I could answer that 100%. What I can say is that for the most part, what I have seen is that taxes stay where they are. I will say that in 2008, 2009, when a lot of property values decreased significantly, those properties were reassessed, and those taxes did come down based on those reassessments, because they didn't come down just a little. They came down quite a bit, and they were there for a few years. It wasn't like we just had a year dip and then they returned to normal. They came down for, 9 or 10 years. So in that case, we did see a reassessment where the county comes out, and basically, if you could almost imagine, the county is doing like a large scale appraisal, where when you're buying a home, the lender sends out an appraiser just for your house to make sure that the loan amount that you're requesting is worth the value of the home. In this case, you can almost imagine the county is doing a large appraisal of all of these properties. They're looking at all of the comps around the neighborhood. They're looking at what's sold recently. They're looking at, anything that's been done to the properties as a whole. So are they always going to come out and specifically assess your property based on That's where I say sometimes challenging the assessment can be worth it. If a lot of people in your neighborhood, let's say you have older home, and a lot of people in your neighborhood have done renovations. They've, put new windows, they've done new driveways with concrete. Um, they've done a lot to really, spruce up the house, so to speak. And maybe you haven't done that yet. And so the county is looking at the neighborhood as a whole, but maybe you haven't done quite as much. You haven't done the kitchen. You haven't poured a $20,000 driveway because concrete's so expensive right now. You haven't done all of the landscaping. You haven't done brand new siding and brand new windows. So you feel that your value of your home is still a little bit less than a lot of your neighbors. That is something that is worth challenging. You might be the opposite. You might be the neighbor that has done all of the work, but maybe the other, neighbors in the neighborhood haven't done those things. Then you probably don't want to raise any red flags. You don't want to go ahead and challenge that. So you really have to look that every case is its own specific scenario. And so, like I said, if you're questioning it, call me. We'll talk about it. We'll talk about what you have and have not done to the property to bring up the value. We'll look at the CMA to kind of get an idea of what your neighbors have done in the area and where values truly are. But a lot of times, um, even though we don't want to face it, a lot of times the county is right on the money because they're looking at inflation. They're looking at what the values in the area have increased, and that's where they're getting their assessed value. So it's a hard pill to swallow sometimes, but unfortunately, taxes increase, homeowners insurance increases. There's going to be maintenance every year. So these are things that I feel like it's really, really important if you're thinking about buying a home that you make sure you looking at the county to see what the property taxes are going to be, making sure that when you are getting the loan that you're factoring in the fact that next year your taxes are probably going to be a little bit higher. Your homeowner's insurance is probably going to be a little bit higher, and making sure that you have the ability to pay those, even though, you had a little bit lower, loan. You want to make sure that you're able to factor those in. And that's why I talk about not being house poor, because that is a factor that is going to be for the lifetime of the loan that you're going to be in this house. So I hope all of this information helps you guys. If you have any questions whatsoever, you can put it in the chat. You can shoot me a text or even email me. I'm happy to share the link, like I said, to that smartasset.com, and you can look at the taxes for yourself. But if you need anything, always reach out. Otherwise, I will see you guys on the live next Thursday.